But if you
Which, real quick, I hate that.
I
because that's what all your financial advisors say is they say, hey, it's okay to defer the taxes because later on in life you're not going to be making as much money.
I think that's the craziest thing in the world. Because why would I want to make less money? Why would I want to have less like that doesn't make any sense.
I know.
But anyway, look at the places where you're putting money. I'm just going to bring up the 401k because we talked about it earlier, but look at those IRAs. Look at your 529 plans. Look at is it doing what you actually want? If you're deferring the taxes till later, go look at the tax code history. Go look at what they've done to taxes before. Mm-hmm. And if it's a picture where you go, oh, that's fine, then go for it. Mm-hmm. And what I found out looking back at the history is this is not okay, what they've done with taxes before. And no way in the world am I going to put my money in an environment where they can change the rules on me and then I'm stuck with the new rules later, all because I didn't want to pay it now. It just doesn't make any sense. I'm not going to do it.
You know what I picked up from that is control. It's all about the controlling of the environment of where you're leaving your hard-earned money at. Hey, Money Multipliers. Welcome back to another episode of the Money Multiplier podcast. I'm your host, Hannah Kessler, and we ask ourselves, do our dollars make sense? Today, Jonah Dew and I are located in Idaho, reporting live from the snowy state out here in the winter months.
I didn't know I should have brought my hat. I didn't know we were wearing them, Hannah.
We got to get in the vibe of the theme of the mountainous vibe. You know what I mean?
I love it. Man, I'm so excited to be here. This is like full circle a little bit, right?
Yeah.
Back in the day when we were a little bit closer, we used to have lots of time to come on and talk about money and infinite banking. And we haven't done it in a while.
I know.
And so I'm excited to catch back up.
Well, and y'all, if you have started from the very beginning of like episode 1, I think that was like back in like 2019, 2020.
Yeah.
I said, Jonah, co-host this podcast with me. So if you go all the way to the very beginning, you'll see a lot of episodes. And that was before we even did video. It was just only strictly audio.
That's right.
And it was Jonah and I doing them.
I love that. You can find those probably on Spotify, on Apple Podcasts,
YouTube.
Anywhere you can find the podcast, right?
Yep.
I love it.
Hey, and then also, let me just give a shout out. Jonah, you have a podcast. You're very big on TikTok, Instagram, and the other socials. Where can people find you?
Yeah, so you can go to the Banking Bros. I actually do a lot of my content with my brother, my real life brother, and we talk, of course, about infinite banking. So we are the Banking Bros. That's the name of our podcast. You can find us on all the social channels at the Banking Bros.
Yep. And now my listeners know a lot about my background, but just high level real quick. Walk us through your story of how you got here with the infinite banking journey.
I love that. So back in 2015 or so, my brother and I were doing a little bit of network marketing. And we made a little bit of a splash, he more than I, in the network marketing space. And what happened is a couple of people that really had the network marketing thing going came to town and they started to tell us all about where they were putting their dollars, right? And so that, of course, intrigued us. Who wouldn't be intrigued? These folks show up to town, they make maybe a little bit more or have a little bit more than the average person, and they say, oh, well, we put all our dollars over here. And they put it into this dividend-paying whole life insurance. And that was a little wild because I'd never heard of that before. But my personal background right out of school was with insurance sales and at a bank. And so seeing the information about using insurance as your own private and personal bank fit right in with what I already knew. And of course, who it came from was so reputable to me that I immediately started to dive in, started to learn it, read lots of books, watched lots of YouTube videos, and the rest is almost history. It's almost been a decade now of infinite banking for me.
Yeah. And how many people have you served up to this point, would you say, roughly?
Oh, man, it's a lot. It depends on how you count them, right? It depends on how you count them. Is a family one per, you know what I mean? It depends on how you count them, but it's probably just a few thousand at this point, which is really cool.
And up to this point in your family banking system, how many policies would you say that y'all have?
We have 10 personally owned policies right now, and there's a few more that we own together, business ventures and things like that.
Yeah. And right now, because I know our topic that we kind of want to cover here today, now, y'all, this is going to be a short and sweet episode because both Jonah and I are leaving Idaho. We spent the last week snowmobiling, skiing.
We sure did.
And actually, we were on the mountain. I didn't even see you at all on the mountain yesterday.
I looked for you on the mountain, but everybody looks the same in the jackets and the hats. I couldn't find her.
I know. So, we really want to get into the topic of taxes today because, hey, it is tax season. Hello,
time.
April.
Yep.
But, up to this point, what have you used your policies for, just high level?
Yeah, so in the last decade of having the policies, my life has had lots of changes. So in the last decade, I got engaged and got married and bought my first house and bought a few cars and had 3 kids. And so the cool part about that is my policies are a part of that journey and that process the entire way through. So legitimately, like, I almost feel like I got my policies as a baby, and then as I became an adult, my policies got me there, right? And that's really cool. But I've used them for almost anything, which is really helpful because as I talk to a lot of you guys that want to get started or just aren't quite sure what to do or how to do it, I've probably already been there.
Yep.
Right?
Yep.
And that makes it really cool because I can walk you through what I did.
Yeah. So let's dive into our topic today
right.
about, I will say, taxes. This is something that I'm still a student of. I am learning. I'm really taking this year of 2025 to dive in and understand the tax code game. So let me ask you, Jonah, I will say if your main focus is to have tax benefits using policies, I'll just be honest, that's not the whole reason that you should be implementing this concept.
That's right.
Yes, it's a benefit within the policy, but it shouldn't be the only reason that you're doing this because you're really missing the whole concept of controlling your money, controlling the dollars.
That's right.
But the tax benefits that really come from the policy is that, hey, I want to pay tax on my money one time only at the lowest rate possible, and then get that money into a tax-free environment where now it's growing tax-free. And that's the policies, because the policy grows on a tax-free basis. So anytime I take out loans from the policy, loans are never taxable in the traditional sense anyways, but also in those later years of retirement, hey, you can withdraw money from the policy, and you can withdraw it on a tax-free basis, little asterisk here, up to your cost basis.
There we go.
But we'll get into that. So I guess, talk to me, Jonah, because really how this topic came about is Jonah just hit me up early this morning. He says, hey, let's film a podcast before we leave. And I said, okay, Jonah, well, what's the topic you want to talk about? He says, taxes.
I do want to talk about taxes. So here's why I want to talk about it. I did a few pieces of research here this morning. So I want to pose a question to you. I want to see if you know it. I do know the answer, but let's see what you got. Okay.
You're putting me on a hot seat.
It's hot seat. So the average American, how much money do you think the average American makes over the course of their lifetime?
Ooh.
How much money do you think? Now, I've got the answer that AI told me and that Google told me. They're a little bit different. They're pretty close, but they're a little different, so I'm going to round. But how much do you think?
So if the average family is bringing in about $80,000 a year, and I'm saying family, okay, so 2 individuals. So $80,000, let's say over their working time frame. Would you say 35 years is a working time frame?
Sure.
40 years? So take
40,000 per person, 80,000 as a group, right?
Yeah.
And multiply that by 35, is what you're saying?
Yeah. So is that 1.4?
Yeah. So the AIs and the internet said 1.5.
Ooh, I did good.
1.5. You did really good.
Okay.
So here's the crazy part about that. They also said that $524,000 over the course of your lifetime will go to taxes.
Man, that's half.
It's about 34% or something like that. And I think that's a little ridiculous.
Yeah.
Right? And here's the crazy part that a lot of people do not realize. You might not either. When you guys started to teach, and I really started to dive into learning the infinite banking concept, we talked about taxes a lot. And just like you, I really didn't know much.
Yeah.
I pay them, right? When I get the job, they ask me to mark the is it a W4 or W9? One of those papers.
W9.
Something. I check in the box and I'm going, please make sure I got that right come April, right? But I didn't realize that actually right now we're in a really historically low tax bracket. Did you know that?
Okay, no.
So here's what I mean by that. Okay, do you know how the tax brackets work? Like if you make 0 to 20,000, they tax you at 10%.
Yeah.
And then you make 20 to 40, they tax you at 14%. Okay. So the highest bracket that you can get to right now, I believe,
It's 40%, right?
I think it's 39. So
39?
you're right on it. Okay. So I think you have to make over $500,000.
Okay.
And you're going to be taxed at 39%. Right now, that's where it is currently. Now, they can change the rules on us, but that's where it's been right now. It's been there for the last couple of years. Do you know that the highest tax brackets in the history of America, right now we're at 39%, have actually been 97%?
Shut up.
3 different times.
Shut up.
Not joking.
What years, do you know?
They were, of course, related and closely related to the wars, World
Okay.
War I, World War II. But regardless of that, 3 different times, the tax brackets have gone all the way into the 90s. Isn't that crazy?
Yeah.
And so a lot of people love to talk taxes, and they love to put their money in these like tax deferred plans. And as you start learning a little bit more, you start to realize, oh, I don't think I want to defer taxes if they're probably going the other direction. They're probably going up, right?
Later, yeah.
Not to mention we've got all this debt that the United States is in, and so at some point they're going to have to start going the other direction, getting some money from somewhere, right?
Yeah.
And it's probably going to be from taxes. And I think that's so interesting. When I learned that, I was like a kid in a candy store.
Yeah.
I'm like Googling. I'm like, let me read this book. Let me watch this podcast on taxes, because I was like, no way in the world it went to 90%. It really did 3 different times.
Wow.
Isn't that crazy?
I had no idea.
And one time, I think it was in the 50s to 60s, it stayed at 90%, the highest bracket now, not all the brackets. It stayed there for 10 years.
Wow. Hi, Money Multipliers. Pardon the interruption. If it's been a while, or if you've never seen my presentation on the infinite banking concept, what I like to call the Money Multiplier method, click this link right here, themoneymultiplier.com/presentation. I'm telling you, 90 minutes of your time can completely change your family's financial future. All right, let's get back to the episode.
Imagine if you have to retire during that time.
Well, and then all these people, how do you live off of that?
I have no idea.
How do you live off of 10% of your income?
I have no idea.
I mean, think about that. If I was a person making $100,000 a year and $90,000 went to taxes, I couldn't pay my bills with $10,000.
No, I can't either. My kids would be hungry, right? I'd probably be hungry too. But I just thought that was so interesting, because taxes take up and eat so much of our wealth.
Yeah.
And infinite banking is such a cool way to pass money, right, with the death benefit, tax-free.
Yeah.
In most cases, again, there's a little bit of a state tax if you're passing a really big chunk of change. I think in South Carolina, where I live, you've got to pass more than $12 million before you're going to get a state tax. No income tax, but you're going to get a state tax.
Got you.
So you can pass a lot of money, income tax free, and then like you said, through our lifetime we can access the money with those loans, income tax free, and we can also, like you said, withdraw to cost basis later on down the road, income tax free. Like for me, that's all I needed to hear. Like 3 times in that last sentence, income tax free also came out of my mouth, and I'm like, perfect.
Yeah.
Because they are taking too much money from us.
Hey, and for my listeners too, okay, because I didn't know this, the cost basis, what that means, it means how much you put in versus how much you've taken out. Yep. So for example, let's say that I put in $500,000 into this policy over the course of these years. Well, I can withdraw $500,000 tax-free. But if I've put in $500,000 and then I've withdrew $600,000, well, then I'm going to get taxed on that additional $100,000 that I've taken out, that more than I put in, that $100,000 that's over my cost basis.
Yep, that's exactly right. A good way to look at it as well, right, is if you put in a $500,000 and you withdraw $500,000 and you get the extra 100 maybe to make 600,000, well, that's not a withdrawal anymore. You didn't put that in.
Yeah.
Right?
True.
So now you're going to have some different rules that go along with that.
Hey, but this is why, though, what's really cool about the policies is that you can actually switch it. Hey, maybe I take out withdrawals up to my cost basis, but then when I get to the cost basis, now I just switch it to policy loans
There we go. Now we can access so much money with these policies. It's really, really cool.
Yeah.
One of the things that I love most is kind of what you said earlier, Hannah. It's paying taxes once and then getting the money in now an environment where I don't have to worry about Uncle Sam anymore.
Yep.
And I really, really like that, because I don't think that you've made podcast episodes, and I surely have not, where we're talking about avoid taxes, run away from them, do all these. We're not saying that.
Yeah.
We're saying pay your fair share. If
that we're legally required to.
If you can find out legal ways to pay a little differently or write some things off, that's awesome too. But pay your fair share. But once it's paid, that should be it.
Yeah.
In our book, right?
Hey, you don't even know this, but actually in my next meeting that I'm about to have after Jonah leaves here today is actually with my tax professional. So this is like the perfect timing.
I love it. I love it.
Hey, I got to ask you though, have
ready.
you ever had a 401k, IRA, or qualified account? Have you ever put money into those accounts, and what have you done with them?
Yeah, good question. So when I first got my job at the bank, that comes pretty standard when you get regular everyday jobs, right? You sign a bunch of papers at the beginning of the work. And so, yes, I did have a 401k that they put money into. I don't remember if there was a match or not. I believe there was. It's a pretty popular bank I used to work at. So I think there was a little bit of a match, but I only worked at the bank for 2 years.
Okay.
So I say to people all the time when they ask me, my 401k was not really big.
Yeah.
Right? We were talking about 4 digits even, not 5
Yeah.
by the time I left the bank. Okay. So when you leave a job and you've got a 401k, you've got to do something with it because the 401k is tied to the job and now I don't have the job.
Yeah.
So I had to roll the 401k over to an IRA.
Okay.
So I've actually had both, but again, we're talking 4 digits, not 5 or 6.
Yeah.
I was a young guy. I had just gotten started. I just told you how long I was working there, right? So I had both. Now, did I understand what I had or was doing? Absolutely not. But that's part of getting a job, right? They're like, sign here on 20 different papers.
Yeah.
One of them's the direct deposit. Oh, okay, I know how to do that one. Make sure I can get some money. And the next one's like, how much of your money is going in here? And they're like, no, just put 5%. It'll be fine, right? That's what happens. So I did have both. But once I discovered the infinite banking concept, it was actually my second policy that I started. I decided you don't have to decide this, and you can consult someone if you're thinking about deciding this. But I decided personally to take the money out of those plans and programs and put them into life insurance.
Okay.
And really a big deciding factor for me was the policy illustration that I had from my very first policy.
Okay.
And I really, really, really loved that there was a big word guaranteed at the top, and then it had numbers underneath it. And the numbers underneath it were sequential and going up.
Just going up, yep.
Right? So that was really helpful for me because I went back to look at all the papers that I had never read in the history of these 401ks and IRAs, and I couldn't find that word anywhere.
Yeah.
And so for me, that was enough. With understanding just the little that I needed or didn't know or had, I went, well, one, I've got a product over here that has a guarantee on the top and a product over here that doesn't. I'm going to put my eggs in the guaranteed one, and I'll learn about them as I go. But I'm probably just not going to keep contributing to the one that doesn't have the word guaranteed on the top.
I get you.
That's kind of the decision I made. And again, I made that decision maybe 24, 25.
Okay. Yeah,
So, yeah.
young. And some people, I do know that, like even my brother, who's a pilot, at his company that he works with, they actually force him to put money into a 401k.
Yep.
Some jobs do.
Yeah, I've heard that.
Did you know why they do that, though?
I think the business gets tax write-offs.
Yeah,
right?
that's right.
Yeah.
That's right. It's for the business owners. They
Yep.
get those tax write-offs for it.
Yeah, isn't that crazy? Okay, Hannah, I got one more question for you here.
Mm-hmm.
Do you happen to know when the 401k came into existence?
I do. Okay, so I know the inventor of the 401k is Ted Benna.
Oh, okay. We're dropping facts.
And because y'all, if let me just tell you this. There's a book out there called the 501k Plan, and it's written by Ted Benna, and he's the inventor of the 401k. And how I came about it is actually from my father. And in that book, he says, hey, this 401k that I created, it's not doing what I intentionally wanted it and designed it to do, and because of government intervention. So instead, I put all my money into a 501k plan. And actually in that book, he says he put 75% of his net worth in a 501k plan. And what a 501k plan is, it's a whole life insurance policy with a mutually owned insurance company that pays dividends.
Hey, that sounds a lot like infinite banking to me.
But when did it come about? I don't know. If I had to guess, was it 70s? Sometime in the 70s?
It was 1978.
Man,
I don't think a lot of people realize that because they think it's older.
Mm-hmm.
It's a staple of what we do now. So
Wait.
it must be old. But doesn't 1978 mean that your grandparents and great they didn't have
it.
this?
Yeah,
They didn't
78.
have
That's
this.
the late 70s.
Yeah,
Wow.
that just happened. Okay, what about now this one's popular.
Okay.
So you're gonna step on some toes here. What about a Roth IRA? When
I
did that
know-
come into play?
That one's in the 90s.
It is in the 90s. You're killing it. You're very good. This is 97. Is a Roth IRA.
97, late 90s. I didn't think it was late 90s though.
There we go, 97. So isn't that interesting?
Yeah.
We accept these as staples. You must do this. You have to do this. Like you just said, some jobs force you into it.
Yeah.
And these things are not actually time tested.
Yeah.
But 97, like that's the Roth IRA was listening to Britney Spears, right? Like this is not time tested.
No. I mean, I was born in 99, so that thing was 20. It's only 27 years old.
Mm-hmm.
That's nuts.
Mm-hmm.
All right.
And so many people widely accept it. This is the way you're supposed to do it. Everybody does it this way. And I'm going, this is kind of new, everybody, right? What about using something maybe that is time tested instead?
Yeah.
Right? How long? Do you know the first ever kind of whole life insurance situation? Do you know how long that is?
I know it was back in the late 1800s, I want to say.
Okay.
I know it's been around longer than our tax code's been here, which was 1913. So I'm going to just guess 1893.
I'm going to take your guess as good because I don't know the answer.
Okay.
But it was in the 1800s. And I think that that's so cool because what that means is whole life insurance is the traditional option.
Yeah.
These newer options are typical, but they're not traditional.
Yeah.
You can't be traditional and you came around in 97.
Yeah.
Right? The traditional option actually is whole life insurance. And somewhere along the way, we forgot about it. We got tricked into thinking the new stuff was the only way to go. We just went away from what was tried and true and worked. And
now, why though? Why do you think that is? Is it because it's lining other people's pockets? Is it because they're trying to do good for the American people? I mean, why? I don't know.
Yeah, I think there's a lot of speculation on why. My interpretation of it is somewhere along the way during the industrial age, right? We've now got these big companies and people and families who say, don't work your own field, come in here and work for me, and I'll pay you X or make sure that you can eat during the winter or whatever. And then they started implementing sort of plans and
matches
and just stuff to take care of their now company and industry. I've got 200 people or 2,000 people and I'm going to do this thing for them. Mm-hmm. And then America started getting covered with that. And then the government started stepping in and then here we are.
Yeah.
Right. And here's what happened. But,
yeah, I got you.
Yeah. That's my interpretation of it.
Yeah, yeah. So I don't know. I actually didn't even know that. Honestly, I'm learning a lot here today.
Yeah, there we go.
With all of this.
Hopefully the listeners and the watchers are learning something too, right?
Yeah, yeah. So, Jonah, let me talk to you about this because now, as I mentioned, I do have a meeting coming up here with my tax person and, business write-offs. I'm just learning a lot about the business write-offs. I just sold my house last year, the capital gains taxes, 1031 exchanges and all of this other stuff that you can do to legally get tax benefits by implementing these tax codes that you can. But the thing is that, have you seen that tax book? I mean, it's like this big.
I've never seen it, actually.
It's huge.
Is it huge?
Yes. and I get that not a lot of people are going to go in there and read line by line and understand everything, but it is important to have a good tax person that you are working with. And I know it is so hard to find. I have just now found somebody to help me with all of this stuff. And honestly, that's good in communication. Because I don't know about you, but these tax people, they suck at
communication. What is going on?
I know.
Just send me an email and tell me what's happening.
Yeah.
Text me back. Yeah, oh man. Anyway,
do you have a good tax person?
That's
now?
for another episode. I have on a scale of 1 to 10, I'm going to give them a 7.
Okay.
They're above average for sure,
yeah.
but they're not great.
Yeah, and not a lot of people are even getting into the field anymore, right?
Yeah, I think it's kind of tough to get into the field, and then of course you have to go to school pretty extensively a lot of times. Mm-hmm. Get that CPA designation, But.
Actually, did you know I went to college? I went to Johnson County Community College. I dropped out because I thought it was more fun making money than sitting in class. But that was the first thing I was pursuing was being a CPA.
Yeah.
And I just said, this ain't my passion.
No, I was about to say you should have done it. I'll hire you right now. Can you outdo a 7?
No, good. Hey, but you are doing some, okay, let me ask you this. It's kind of like the whole like Robert Kiyosaki kind of model of buy, borrow, die. Mm-hmm. Have you heard that?
Yep.
Are you doing any borrowing to get some depreciation on the taxes?
Yeah, it's a good question. So there's all sorts of, you mentioned it earlier, like business depreciation things you can do. I'm doing all sorts of fun things. One of the things that I talk about most, because my kids are still in my household, is paying my children. You don't have that luxury just yet, but I do, right? So I can pay my kids. I believe this year, 2025, it's $14,900 a kid.
It goes up every year.
Yeah, it sure does. Well, there's inflation. Some other stuff goes up every year too.
Yeah.
But this year I can pay the kids. So I talk about that one most because my kids are still little and they can do things around the house, the office, and marketing and social to help. And so that's a really, really cool one. There's also some other fun ones, right? Everybody kind of has heard about, if you're into the tax write-off thing, you've heard about the Augusta rule, renting out your primary. I mean, there's some cool ones, right? Yeah. And so what I have not jumped into the big depreciation on, is that what you're asking? I haven't jumped into that one yet. I need somebody to hold my hand and walk me through it and then communicate to me about what we're accomplishing, because that would be helpful.
Hey, when you're paying your kids, I actually have somebody who does pay their kids, and all of that money goes directly into a policy.
Oh yeah, my kids' bank account pays for their policies.
Yeah.
Yes, of course I started them and I funded them to start, but now the kids' money pays for that. Yeah, for sure. Yeah. And when they say I need all these things for Christmas, I say we're taking some policy loans. Here we go. Right? It's a teaching moment. It's an opportunity. Yeah.
Hey, before we close out here, because I know you got to get on the road, but tell me the story. I know you posted this on Facebook and you actually shared this around on some of the stages that you've spoken at, is how you're teaching, like even your son, how he bought his piano. Yeah.
So we do this pretty often. I realized someone asked me recently, like, how are you teaching the infinite banking concept to the kids? Similar question to what you're asking. And I started to realize, you've probably heard this before. I know you have for sure. It's like when you know something well enough, you teach it, right? Teaching it is how you know it well enough. And so when you go to teach it to kids, there's certain concepts that they don't all the way quite get yet. Yeah. And so I have to think about what I want to teach them. So what I teach my oldest, he's the one that actually, he's pretty good at math. He likes money. He cares about it, right? So that's fun for me. And the other ones aren't there yet. So the oldest one, we teach him creating value. Yeah. Right? You earn dollars. If you want dollars, you have to create value. Yeah. That's what he knows. So what I'm doing currently, now I used to pick up the dog's stuff and help with the trash, right?
Make the bed.
Yeah, there you go. But now I'm saying you got to create value. So he's got a little sister, a little brother, and a mom that he hangs right around all day, right? So you've got to create value. I don't care what you do. You are allowed to come tell me how you helped them with something, what you did to create value. And if you come to me and you say, we did this or I did this to help out around the house, I'll pay you for it. You got to create value. That's how you earn money. And then, of course, when we earn the money, it's got to go into the bank. So he's got a jar, right? He keeps all his coins in there. We turn that in at the little coin machine when it gets full, right? And he earns money and he helps out, like I said, around the office and the house. He earns money. We put it into the policies. So he knows he's got a bank. In fact, I made the mistake one time of logging into his policy to show him his cash value. This is a pro tip. Don't show the 7-year-old how much cash value is in the policy, because then he's going to start asking for a hot tub. Because that's what happened. He's like, Dad, we can do it. We have I'm like, we don't need it. He's like, we do need the hot tub. Anyway, but what we do is we take policy loans anytime he wants to buy something. So I wanted him to learn to play the piano. I took piano lessons growing up. I've got a sister who majored in piano and performance. So we wanted to buy this piano. I wanted my son to learn how to play piano. So we call his aunt, my sister. We say, what piano? We go get the piano. We take a loan for that. And then, of course, most importantly, he knows that we can buy anything we want using our banks, but we always create value to earn money to put it back, right? And that's what's important to me, and that's what I'm trying to teach him at 7. Yeah. So that's what I got. Now, again, maybe when he turns 8, I'll start adding some more, but right now that's what we got. Yeah. And
I didn't mean to make a whole pivot and go down that road, because honestly, we need to do an episode sometime about how to teach the kids about money. Yep. I don't know if you know this, but I've been doing a lot of TV segments, and one of my segments is how to teach your kids about money. I love it. And you actually gave me the inspiration of the 3-cup system. Okay. But the 3-cup system is save, spend, give.
Okay, I like it.
You know?
I like it.
So we got to come back and do a whole episode on that. But before we close out, Talk to me. Are there any other tax questions, tax areas that you want to cover?
Yeah, I mean, really, I tell people this all the time when they ask and when their topic and their mind is taxes. And that might be you because it's really, really close to tax time, right? And if you're planning ahead, even if you listen to this episode and it's not close to tax time, that's when you do all your strategy and getting out of the taxes when it comes to tax time. Right now, right?
Yeah.
And so a lot of people, what I like to tell them is look at the places where you're placing money now, and is it really doing exactly what you want it to do for you in regard to those taxes?
Yeah.
For instance, we talked at the beginning of the episode about the 401k, right? 401k is deferring taxes. A lot of people love that idea.
Yeah.
I don't want to pay them now. I'd rather pay them later. But if you
Which,
go,
real quick, I hate that.
I don't
because
like it either.
that's what all your financial advisors say is they say, hey, it's okay to defer the taxes because later on in life you're not going to be making as much money.
I think that's the craziest thing in the world. Because why would I want to make less money? Why would I want to have less like that doesn't make any sense.
I know.
But anyway, look at the places where you're putting money. I'm just going to bring up the 401k because we talked about it earlier, but look at those IRAs. Look at your 529 plans. Look at is it doing what you actually want? If you're deferring the taxes till later, go look at the tax code history. Go look at what they've done to taxes before. Mm-hmm. And if it's a picture where you go, oh, that's fine, then go for it. Mm-hmm. And what I found out looking back at the history is this is not okay, what they've done with taxes before. And no way in the world am I going to put my money in an environment where they can change the rules on me and then I'm stuck with the new rules later, all because I didn't want to pay it now. It just doesn't make any sense. I'm not going to do it.
You know what I picked up from that is control. It's all about the controlling of the environment of where you're leaving your hard-earned money at.
There you go.
And that's why I like the whole life policies. And no, it's not, I don't do IULs, VULs, and those other vehicles that are out there because I'm losing the control. The risk is now put back on me, and now it's being not controlled. What's the right word I'm trying to look for? It's volatile with what external factors the market and other people are doing out there. I don't want that because just like how Jonah said, guaranteed. Remember how Clay Summers, he stamps guaranteed on everything that comes with whole life?
Right at the top of the paper. I love that.
That's what I want. So thank you, Jonah. Are there last comments that you want to make?
No. If you're a listener of this podcast, thank you for doing so. That's awesome. If you're interested in listening to myself and my brother, again, that's the Banking Bros podcast. You can find all our stuff there. It is very similar to this one. We're talking all about infinite banking. Yes. That's what we're talking about, right? Yep. That's what it is. And all of the caveats that infinite banking has to do with. So I appreciate you having me. Thanks.
Absolutely. Do you like my makeshift mic stand?
I love it. Coming out of the...
Yo, this is... Because I got a few comments on my last one when I did it with Pops. Every time I travel around, I'm always doing my solo episodes, and then Pops or Jonah or Stephen Nagy or Chris Noggle, they come to me, they're like, hey, let's do a podcast. I'm like, well, shit, I don't got my mic stand, but okay, we'll make it work. So thank you for being here. I appreciate you.
Yeah, of course.
Catch y'all soon, okay? Hey, and every single week, every Tuesday, I'm here with another episode. Hit the subscribe button. Leave a comment down below. If you have certain questions, you can reach out to me at podcast@themoneymultiplier.com. And y'all, just real quick too, if you were joining me for the Tampa event, we just had the Tampa March live event, Mastering the Money Game. I went through a lifespan of a policy because I know that you're going to be doing that with your children of how they can finance weddings, cars, colleges, their children's colleges, and their retirement, tax-free income during retirement. So reach out to me if you want that recording because, hey, I recorded the whole entire event. So thank you y'all for being here again, and I'll catch you next week. Bye, y'all.